Well, guys, the results are here, and it's not just Google and Tesla's that we're going to talk about today. It's the latest debt reads, and they're massive. In today's video, we'll break down what's going on with the biggest dark pools, why momentum seems to be stalling in certain areas, and how these charts here could potentially tell us where the next big moves are. Guys, we're hitting trend lines, we've gone positive gamma, and there's a lot of leverage. Let's talk about it right now. See you soon. Well, welcome back everyone to The Daily Show. My name's Tom and we have a lot to discuss as always. Latest earnings data, what happened to Tesla and Google, but more importantly, what is going on in the debt markets right now? Because although we are reaching all-time highs and we're squeezing higher, we need to be aware of a couple of problems. And you might say, well, Tom, this thing isn't selling off. Why do I need to care? It's because when it does, it tends to be a little bit nasty and it can be kind of quick. Just take a look at the latest FINRA investor margin debt reads. This is the latest as of brand new breaking reads, and we have just surpassed $1 trillion. Now, this may not sound like much, but remember, each overall bubble needs to be bigger than the last one, and this has now officially done it. We all could have suspected this was about to occur, but we've gone past 2021, where we saw sells, 2007 by far, and of course the 2000 bubble. And the key here is that it is most likely a bubble. Why? When people take this much debt, eventually things go bad. To make matters a little bit more strange, we also saw Barclays, a euphoria index, go back into the overbought range. Now, it hasn't been there for quite a while. You can see February was the last point we got close to this read, and the other ones were July of last year, which led to a sell-off. Again, not a crash, but a sell-off. And of course, then we also saw the 2024 start, the 2022 sell-off, which of course was also a big one, and even the 2021 hyperstock bubble. So this is a pretty good read. I mean, it may not have a 100% track record of producing 20% declines, but I tell you what, it certainly is one of those ones that I pay attention to. And while markets are rallying up, it's important to note that everybody is stacking calls. And this has happened before. Again, 2021 hypergrowths, it stayed high for quite a while and markets actually pushed and pushed and pushed. And then eventually, of course, left people holding the bag. And I mean left holding the bag. Remember, some of those stocks went down 90%. And while the whole market didn't actually crash, what we saw was rotation. And we could be starting to see that again. Remember, rotation is the key. And what Wall Street does is they move into other areas. One of the areas we've been talking about recently on the channel has been metals. And they are going ballistic, whether it's rare earth minerals, just metals in general, even iron ore, everything's up across the board. And the last 2 weeks have just been like bang, bang, bang in terms of massive gains for a sector that has been unloved for quite a while. More on that in upcoming videos, but let's just quickly take a look here at retail activity, which is the same as 21, another similar read, and of course, 0 DTE options that are just going ballistic. Now, in one of the previous videos, or actually two, we talked about how 2/3 of the S&P options volume is now coming from retail. However, a few of you guys out there are actually hedge fund managers, and you messaged me and you actually said, Tom, even though we're professionals, we're actually being basketed like we're retail. And that makes more sense. I was thinking, how is this possible? It's 2/3. But anyway, that is a bit of an update, and I really appreciate some of the hedge fund guys messaging us and letting us know. Always great to see you guys watching in the community, and it's surprising who watches the channel, so thank you so much, guys. S&P, what is going on with the dark pools? Well, quite a few dark pools actually coming through. We had phantom prints just about 2 days ago. We had a whole bunch of rando late reporting prints that were dark pools into today. And of course, we've pushed higher into the positive gamma zone. We've got through that 6350 area, which we've been talking about this zone here for a while being an extreme level. And we actually hit 6370, which is the perfect trend line hit for the S&P. I didn't know if we'd get to this level, but we are here now. So it'll be interesting to see whether these dark pools, such as the NVIDIA 2x lever, are actually sells, whether they're probably sells. I mean, it's probably just someone saying, near enough's good enough. But it'd be interesting to see if there's a reaction off them. Remember, guys, currently we have a lot of warning signs, but we do not have the trigger to be going short at this stage. Where is the price action? Where are the flows really going negative? We just don't have that huge cluster sell that we generally see near the tops. Earnings sentiment is super bullish, as we know, but earnings itself was mixed. Now, Google, you guys know that I've thought it's the most undervalued Mag 7 stock fundamentally. and it did pretty well. Here's the latest details. Nice chart here from fiscal.ai. And you can kind of see here that they've been doing pretty well across the board. And when we take a look at Google search revenue, it's on the rise. Search was up 12%, cloud was up 32%, YouTube was up 13%. Thank you for watching here, guys. And subscriptions and devices was up 20%. Network down 1%, and other beats were about 2%. So price was up afterwards. These are really cool charts. And you can see here cloud revenue continues to rise as well. So I think a pretty good result overall for Google. The market seemed to like it after hours. It was kind of like down up. But generally speaking, it came in very hot, 10 days up in a row. And if you've been buying Google, it's probably been a bit of vindication, I guess, over the last week or two, because it was really behind the likes of a Microsoft or some of the others. But yeah, now they're back. Now, Tesla was a little bit different. Let's just read out some of these results here. Revenue down 12% year on year. EPS, 40 cents, below estimated 42, so a miss. Deliveries, negative 14% year on year. Operating margin slashed 42%. Elon Musk warns of rough quarters ahead. And obviously looking ahead to robo-taxis, Optimus in focus. So clearly a massive amount of turmoil kind of going on in the business in some ways. And what that is it's really trying to move to a totally different model, which is, of course, going to be around robo-taxi services and Optimus. And it's all going to be about the announcements coming later this year. Remember, Elon has already told us there's going to be a big one coming. It's going to be beautiful. And we don't know what it is yet, but I'm sure it will be a big announcement when it happens. And of course, markets can often hype into that level. But Tesla was down 5% in after-hours trade, living up to that expected options vol. So have we arrived at the peak? Well, we are around this point here. And obviously, the market is tracked kind of similarly. We have hit a trend line, which we'll look at in a moment. Are we going to hit chop? Well, we just don't know that yet. We're in what we call a dull market, and the market's been, of course, spiking up. Volatility is set to rise generally at around this point. We're literally in VIX week next week, which tends to be where VIX spikes. So that's the last week of July. And this is where we had the problem last year. So generally this Q3 period, there are always usually issues on the horizon. But what tends to happen before that occurs is we start to see defensive moves. So we're probably looking for like a 3 of 5 trading day defensive move, where 3 of those days it's more defensive. And of course, we haven't seen that yet. Defensives have been going down and momentum has been going up. It's been really hyper growth and momentum over anything to do with defensive so far. This week, CTA estimates are, of course, all bullish. That means that momentum funds had to buy and they were forced to buy on any tape. So it makes sense, I guess, that we're pushing higher, and options and retail, of course, are pushing it there. And commodities have been the winner since we first talked about this chart, thanks to top-down charts and our knowledge, of course, in the area. It's been a bonanza, I've got to say, in the commodities area. Not only is the old silver doing very well, but we've also seen copper over the last 24 hours break up. We've seen iron ore go ballistic. We've seen so many different minerals and metals have, 20%, 30% kind of returns over the last couple of sessions. If you miss it, who cares, guys? Don't worry. There's always another opportunity. Abundance mindset. Metals and minerals were hated for a long time. Sometimes hypergrowth was hated, then it came back. Remember, there's always something new, and there always will be in the markets, which is the beautiful thing. So the market will move on to the next big tech, and of course we have Intel, American Airlines. We got a mixed result out of these guys, so nothing much there. And I'm sure a lot of you are probably asking the question, well, Tom, what about all of these trade deals that are going on? Look, I've been analyzing them, but I guess at the point now, it's not really clear there's really any win out of these. There just seems to be a mixture of stuff. And I think the real thing here is it's meant to be 15% tariff kind of forced. So remember, with tariffs, they take a long time to show up. We've already estimated that generally it's like 3 to 4 months minimum. But this time around, because inventories were bought ahead of time, could be 6, 9, or even 12 months. So it's going to be a while before you see tariffs show up in the economy. And that's why they're not there in this earnings season. So let's talk about stocks. We'll go through a couple of positive gamma situations. But first up, RSP. Take a look at this equal weight market really ramping here. I've got to say, it doesn't look like a weak chart. I mean, yes, it's hitting an all-time high, but that is a super bullish kind of looking hammer on the weekly. And obviously, it's strong at this stage. We will continue to watch this chart. But the other big note was, of course, the S&P 500. It actually hit the trend line properly today. So I've obviously talked a lot about 63.50, but Look, we are overbought. It's dull. The problem is the market's making these series of higher highs and higher lows. It hasn't made a lower low. I think 6,200 will be a point to watch in the future in terms of actually showing some kind of bearish intention, but that's a dull market if ever I've seen one. And the issue with these is you do not short them unless you know what you're doing, use options. And as I've said, I think it's still worth, personally, I believe that having a little bit of powder dry might be worthwhile because of the leverage and because of the hype train. But that doesn't mean you go flip everything and say, oh, I'm out, goodbye, sayonara. It's more that you just basically say, okay, I'm aware of the situation. And that's what we're trying to do here on the channel. We've said consistently, this market is pushing higher. It's got that positive gamma situation. Here are the new updated options high lows. You can see that trend line literally hit. I didn't move anything. And it's, of course, completed the flag move. So a lot of completions here on the S&P. It's literally hit that level. I didn't know if it would, but it's certainly done it at this stage. S&P futures, in terms of what's going on with the positive gamma, you can see here markets are trying to push towards that next level of 6,400. And if they get through 6,400, yeah, you guessed it, 65 could be on the horizon. This is the point that I think differentiates a lot of traders and investors. FOMO and disbelief and so many things will have come through so many people's minds over the last 24 hours. And I think that's a big issue because, you know, this is the point where it pushes that little bit too far and makes people go, oh, I missed out, I've got to get in. It's that sucking effect. Remember, markets will do something irrational longer than you can remain solvent. NVIDIA, 175 remains the call wall. It's underneath that. So still been a bit of weakness in semis, even though they had an okay 24 hours. And Tesla is sitting around the 350 marker. So obviously you're looking at around that call wall. But of course, after hours, it got crushed back down. So what level are we looking at? 300, 280. So I'd probably say Tesla goes towards 300, 280 after the earnings. Let's now take a look at what we've got here in terms of the options market. You guys can clearly see that there's no new movement in the options and bond spreads. The US 30 has remained underneath 5.05, which is not negative. And the RSP, that is the equal weight, has started to pick up again. Now, notoriously, this has been, especially when the ratio was this low, we were in that last kind of area of the market. So we started to see usually more of a defensive spin. So when we've been here before, we often saw markets fall off. Not 100% read, but certainly something you want to look at. So this is the Qs versus an RSP combo. And it's basically just showing here that when you're down in these levels and you're going towards that breadth move, the market's going into smaller sectors. And often what will happen is it will sell tech. So if you actually have a look at it, you can see here ARK-K going down. But if you look at XLK, you might notice that we're seeing kind of a little bit of slowdown in tech. Still very bullish, don't get me wrong. But if that starts to decline and the market stays up hot and it starts to rotate, that's something we've seen before. So something to watch. Dollar index, no movement here on the dollar. So, of course, we will be paying attention to that. Invest Head and Shoulders traders will be looking at 99 plus close, and then they'll say, yes, it's a strong dollar. But remember, that's the most crowded trade right now, pretty difficult. And gold trying to push that 34.50 narrative so we can get to the pennant move. If the pennant does go through, you know, it could be 4,000, 4,200 on the highs, and silver higher highs, higher lows, so still looking towards the 40s. Oil, certainly weak at this point, back to the support. No break down, which I think is important to note, but something to be looking at. And Tesla, you know, at this stage, you're looking at the 300, 280. So are we going to 280 after that earnings? Possibly. It's going to be opening up around -5 at least at this point, unless Musk says something on X and gets it back up there. What about coin? What about the hypergrowths? Well, you guys can see here that the market has hit and tapped out at that IPO phase that it previously had. We did see Hood kind of recover a little bit, but this is FinTech 2.0. So again, what led the market up, starting to show volatility. I like seeing usually markets going up.
Tesla reported a second consecutive quarter of declining auto sales, with market share dropping in Europe. The expiration of tax credits and policy changes pose additional challenges for the company. Despite this, Cathie Wood's ARK Invest purchased $47.6 million in Tesla stock, indicating confidence in the company's long-term prospects. Analysts maintain a mixed outlook, with some keeping buy ratings amid concerns over demand. Regulatory pressures add to the uncertainties that Tesla faces moving forward.
NVIDIA is navigating challenges with AI chip smuggling into China while maintaining a strong market position. Analysts predict significant growth opportunities in the AI sector, with XAL planning a substantial purchase of NVIDIA chips. Despite smuggling concerns, investor confidence remains high, reflected in a stock price increase.
Tesla's Q2 earnings reveal a 12% revenue drop. Revenue stands at $22.5 billion. Vehicle deliveries fell by 13%. CEO Elon Musk warns of potential rough quarters ahead. This could impact stock performance. Despite these challenges, analysts remain optimistic. They see potential in Tesla's autonomous vehicle technology.